watching the latest news from FinancialMirror.tv. The United States will pump $250 billion into its banks on Tuesday, following similar measures in Europe, with the threat of a recession still looming, even if that of a financial sector meltdown has eased. Major European economies showed signs of flagging output and falling business confidence, but smaller countries also suffered acutely. Under the US Treasury plan, about half the total funds are likely to go to the top 9 banks to get them lending to each other again. The Treasury will buy stakes in Bank of America, Wells Fargo, Citigroup, JP Morgan Chase, Goldman Sachs, Morgan Stanley and Bank of New York Mellon, while State Street and Merrill Lynch are also expected to receive a capital injection. Similar moves in Europe helped restore confidence among investors on Monday. London, Berlin, Paris and others pledged more than €1 trillion in direct capital injections for banks and to underwrite lending between banks that had all but frozen. Japan joined the global push, saying it could inject public funds into regional banks to make sure small firms can get cash. Stock markets gave a thumbs up to the government action. Japan's Nikkei surged more than 14%, the biggest one-day gain in its history, while European shares rose around 5%. Some relief was also evident on the money markets. LIBOR rates for overnight dollars were fixed at 2.18125%, down from 2.46857 on Monday, while the interbank cost of borrowing 3-month dollars had its biggest fall since March, and 3-month euros charted the largest fall this year. Iceland's blue-chip stocks plunged 76% when trading reopened on Tuesday after a week-long suspension, and an official delegation from the Atlantic island sought Russian help in saving the economy from collapse. Last week, the government took control of Kaupthing, Landsbanki and Glitnir and has been forced to abandon attempts to defend its free-falling currency. Icelandic officials arrived in Moscow on Monday, seeking funding from oil-rich Russia. Iceland initially mentioned a $5.45 billion loan, around 1% of Russia's gold and foreign exchange reserves. Russian officials say no details have been agreed, although they are looking at the loan request favourably. Moscow's already unveiled a rescue package for the Russian market worth over $210 billion, but analysts say capital flight may not stop until global financial markets stabilise. Some ministers in Iceland have also raised the possibility of membership of the European Union, long resisted by the island's fishing sector, to safeguard the economy, as its crown currency was essentially untradeable on Tuesday and its value was impossible to calculate. Nationalised British mortgage lender Northern Rock said it was repaying its emergency government loan more quickly than planned, but warned the housing market slump could hinder further progress. In a trading statement, Northern Rock said the outstanding balance on the loan was £11.5 billion on September the 30th, less than half the £26.9 billion at the end of December last year. The lender has been paying off its government loan mainly by raising its rates in an effort to encourage customers to take their business elsewhere, redeeming their existing mortgages. Sources also confirmed that Northern Rock had held informal talks with the government about merging its loan book with that of Bradford Bingley, the failed mortgage bank that was taken into partial public ownership last month. Russia plans to channel $50 billion from its foreign exchange reserves toward helping its firms refinance foreign debts, as the global financial crisis makes it almost impossible to raise new loans abroad. Russian firms borrowed furiously during the 10-year economic boom to expand and make acquisitions, and now have to repay or refinance $120 billion by the end of 2009. Prime Minister Vladimir Putin said that only firms working in key sectors of the real economy will have access to refinancing aid for loans taken out to fund projects of strategic importance or to buy assets inside Russia. The Russian companies which are seeking state help are the second largest oil firm, Lukoil, gas giant Gazprom, and oil firms Rosneft and TNK-BP, the world's largest aluminium producer, UC Rusal, Russia's second largest bank, VTB, and 9 retailers, including Russia's largest grocer, X5 Retail Group. Oil, metals and almost all other traded commodities rose across the board on Tuesday in a broad relief rally as financial markets digested a coordinated effort to recapitalise the world's banking system. US light crude oil futures rose more than $3 to over $84 a barrel. Spot gold jumped 2% to a session high of $853.50 an ounce, while copper, platinum, silver, wheat, coffee and sugar all made partial recoveries from recent sharp falls. Among the biggest gainers on Tuesday was copper, which saw its 3-month futures contract on the London Metal Exchange jump as high as $5,500 a tonne, up 7.5%. The metal, used in construction and power industries, rose almost 7% on Monday, but a 22% drop in prices last week means that copper is still well below its recent highs. Copper prices have dropped 40% since a record high of $8,940 a tonne on July the 2nd, on concerns about the prospects for global demand, as the West faces the prospect of recession. A majority of Americans predict the economic crisis is going to get worse, and most are not confident that either US presidential candidate will be able to fix it, according to a USA Today Gallup poll. 84% of those polled predict the economy is going to get worse, even as the US government makes a new push for faster relief to a paralyzed banking system. A record 91% of respondents say they're dissatisfied with the way things are going in the United States. 63% said they are not confident that Republican presidential hopeful John McCain, if elected, can end the economic crisis. On the same question, 50% said they were confident Democratic hopeful Barack Obama could fix the economy. With 3 weeks to go before the November 4th election, both candidates are focusing on the economic situation. McCain planned to unveil new proposals on Tuesday aimed at helping Americans cope with a sharp plunge in the stock market. On Monday, Obama proposed 4 steps to create jobs and to cushion Americans against the effects of the economic downturn as he campaigned in Ohio. Thanks for watching FinancialMirror.tv.